Welcome back to the Global Business Report here on Arise News. The United States Department of Justice has concluded its investigation of the purchase of oil prospecting license, that's OPL 245, by Italian oil giant Eni, without taking any further decision.
Yes, so the company, which is registered as AGIP in Nigeria, is also under investigation in Milan over the $1.3 billion deal brokered by the Goodluck Jonathan administration back in 2011. The company, which was also cleared over wrongdoing in another oil field in Algeria, said it believes none of its management were guilty of corruption in its acquisition of OPL 245 with Royal Dutch Shell. In a transaction facilitated by then Minister of Justice Mohamed Adoke on behalf of the federal government, the Italian firm and Shell had raised $1.3 billion, including the signature bonus of about $200 million, which was paid into a JP Morgan bank account owned by the Nigerian government. Now, the World Trade Organization has cut its forecast for growth in global trade by this year by more than half.
That's right. Reasons are further rounds of tariffs and retaliation, a slowing economy and a disorderly Brexit could squeeze it even more. WTO said on Tuesday that it now expects global merchandise trade to increase by 1.2% this year, compared with its April estimate of 2.6%. Now, for 2020, it has been forecast to grow at 2.7%, down from a previous estimate of 3%. And an analyst from financial derivatives, Adim Okwesai, joins us in the studio for more on this. Adim, good to have you.
Thank you. Thank you for having me.
Now, you've heard that WTO is slowing growth forecast with prospects for more downgrade. What are the implications here?
Well, the implications are the effect on the global economic growth will be very dire.
All right.
What we're seeing here is that there's been a pronounced cooling of commercial activity in the two largest economies, namely the US and China, which has been further worsened by the impact of tariffs imposed by each other.
Yeah.
We're seeing trade in Europe being constrained by the fears that Britain will leave the European Union in a disorderly fashion. And the impact of this is that trade is acting as a menace to other global economies. Countries are dependent on trade where trade accounts for a large proportion of their GDP.
True.
Germany is a prominent concern for Europe. What is happening in Germany is that Chinese firms, which are subject to US tariffs, are reducing their purchases of German goods, German-made goods. Mm-hmm. So that is having an impact on the manufacturing sector. Manufacturing sector data came out yesterday, and the sector plunged deeper into contraction. So other economies are reliant on China as a source of China, which purchases a large portion of their goods. For example, Singapore, Malaysia, Taiwan. Those economies are also suffering. But I think this trade reduction is reflective of this ideological struggle between protectionism on one hand and globalization on the other hand. Evidently, protectionism is winning, aided by populism and the likes of that. But I believe that this trend, this reduction in globalization has been underway for the last couple of years. The reason why I say this is because, number one, activity has shifted away from goods into services, which is harder to sell across borders. For example, you can export your scissors, your hair products, but it's difficult to export your hairstylists, for example. Mm-hmm. China, which has also been a major player in global trade for the last couple of years, has become more self-reliant in manufacturing, thereby reducing its need to import from other countries. Also seeing the principle that firms and investors should be treated equally, regardless of their nationality, is being thrown away. We're seeing tax systems, for example, a clear example is Europe, where Europe is using their tax system to target Silicon Valley goods, Silicon Valley firms, I mean.
Yeah, right.
So this trend has been underway for a long time, and the impact of this is that firms will start looking inwards. They'll start sourcing goods from their domestic manufacturing firms and also from other regional firms. Yeah. So although we can look at it as a negative, although globalization has been blamed for dispersing supply chains, thereby resulting in job losses, has been blamed for rising debt and other sources of other various issues. But this reduction in globalization wouldn't solve the problems that globalization created. So it's a cause for concern, but it's the world we live in.
Yeah,
right.
Okay, so you've talked about this ultimately being an issue of countries being more protectionist and also the push for people and countries to be a bit more globalized. If we were to put this into like real context, how worried should we be? Is it time for me to kick off my shoes, pick up my bag and like run to another country or make my own country? Like how bad is it? We talk about negative outlooks here and there. I just think in terms of context for the average person, how worried should they be?
Well, it is very worrying. I think you should be very worried because a number of institutions, namely the IMF, has branded this trade overhang as the biggest risks facing the global economy. And it marks a dramatic shift from 2.6 growth in trade to 1.2% trade growth in trade. That's a over 50% reduction. Mm-hmm. So what we're seeing is that firms are producing less. They're exporting less. If they're exporting less, their profits will be hit. If their profits are hit, they'll be forced to downsize their operations. They'll be forced to cut jobs. That would impact on aggregate consumer demand. That will impact on consumer confidence. When consumers are being more thrifty and spending less, the global economy will be impacted on. So it all boils and has a knock-on effect on global economic growth. So the effect of this, although we're not going to fall into a global recession this year, is unlikely, but it's inevitable. Maybe 2020, 2021, the global economy will hit a recession and consumers will be the most affected. So it's a big cause for concern.
Yeah. Now, still talking about specifics here, and of course the effects of what WTO said. Nigeria's growth rate is hovering around 2% threshold, while Kenya has expanded to 5.6% recently. So, despite the low growth forecast, what's Kenya doing right, and why is Nigeria still struggling?
Well, the simple answer to that is that Kenya's economy is more diversified than Nigeria's economy. Kenya, they exports flowers, they exports coffee, tea, and they have a booming tourism sector, and they also have a very strong manufacturing sector too, and they're also commodity dependent. So they have a very diverse source of revenue, apart from Nigeria, which is only dominated by oil. Nigeria's economy is clearly dominated by oil. We can see that. I think Nigeria's trade statistics came out in second quarter of recently. For the second quarter came out recently, and what was most concerning is that we saw a reduction in non-oil exports. Mm-hmm. Crude oil exports rose, but non-oil exports dropped by almost 50%. That means we're not doing enough to diversify our economy. So our economy will continue to slow below that population growth rate for the foreseeable future unless we can diversify our economy properly.
Very good, Adam.
Well, let's move on now. We have another story to talk to Adam about. The Lagos Chamber of Commerce, Benin Republic, Niger Republic and Ghana are feeling the heat of Nigeria's border closure with neighbouring countries.
That's right. The border restrictions came after Nigeria and Benin agreed in July to join the African Continental Free Trade Area, which targets greater economic integration through the removal of trade barriers and tariffs on 90% of commodities. Now, the duty-free movement of goods is expected to boost trade in the market of 1.2 billion people, similar in size to India, and a combined gross domestic product of $2.5 trillion. Nigeria has limited the entry of cargo from its borders with Benin. And Adim Okwesai is still with us to discuss this. Adam, so how would you assess the impact of Nigeria's border closure with its regional neighbors? We've seen the figures, so what do you make of it?
Well, I'll first start by saying that this is linked to the Africa Free Trade Agreement. At a time when globalization is taking a back seat, Africa has signed this historic, monumental Africa Free Trade Pact. But this border closure just doesn't look good for that deal because what we're seeing, Nigeria is obviously a major player. Nigeria and South Africa accounts for over 50% or over 40% of Africa's GDP. So if Nigeria closes its border with Benin Republic, it'll also have a spillover effect on West Africa trade in general. I think 80% from that article I read, 80% of West African trade is done by road. If the border is closed between Nigeria and Benin, it'll also affect Togo, it'll also affect Ghana. So it's a source for concern. The objective of the of the border closure was to boost or stimulate our agricultural sector, was to make us self-sufficient in agricultural production. Yeah. But if you look, yes, on the face of it, it looks positive. It looks like it would have the desired effects. But if we look deeper into it, we can see that there are other factors that are happening in our agricultural production. Infrastructure is the obvious one of that. Lack of inputs, lack of formal land titling is also a factor. So there are several other factors that we have to address first before we can. I think the border closure would have more cons than benefits. That's just the way that's the way it is.
I think, do you know what? I think that lots of people, they go to sleep, or wake up rather, thinking that their government knows exactly what they're doing. Now, I can't say that that's not the case here in Nigeria, but one thing I do want to ask, especially in terms of this border closure, do you think the government's intentions, their goals have been achieved? Has it been worth it for them? Do you think this border closure, especially since we don't know when it's going to be reopened, it must, in theory, make sense to the government? Do you think that they are still... What I want to say is, does it make sense for them?
Realistically?
Realistically.
That's the thing with the Nigerian government. I think we tend to overlook long-term benefits in favor of short-term benefits. Yes, in the short term, the border has reduced smuggling. We're seeing price of petroleum products come down drastically. But at the other side of it, we're seeing domestic goods like rice increase by almost 30%. Tomatoes, almost every domestic good produced has increased. So, and if you look at smuggling, is still going on. We can't completely shut down smuggling. Smuggling is still going on, regardless of the border closure. So it has derived some benefits, but in the long term, it wouldn't benefit to anything. It would create more problems for us. That's the way I see it.
Obviously, in 30 seconds now, Adam, you were talking about the issue of protectionism by other countries. So are we toying along that path?
We are clearly on that corner, on that protectionism path, yeah. But our president is very leaning towards socialist policies. I think he has a fear. Let me not delve into that corner. But from his policies that he's enacted, he's certainly on that protectionism camp. Yeah.
All right, very good. Adim Okwesai of Financial Derivatives, many thanks for your thoughts on these issues. Good to have you.
Thank you.
You're still on to Global Business Report here on Rise News. Up next, Nigeria's Apex Bank has once again increased loan deposit ratio to 65%, has given banks up to 30th December to comply. Details in a moment. Stay with us.